All right, in this lesson, we are going to be looking at purchase discounts and what those look like. Now, purchase discounts are a little bit different from the last couple of lessons in that we return goods or we're trying to return goods and we are given some type of benefit to keep the goods. Purchase discounts are an important aspect of a company, and not every company does it, but those companies that do it usually have a problem collecting cash from their customers. So we're going to talk a little bit about purchase discounts in this lesson, what it entails, and then how do we read purchase discount terms when they're given to us. We're not actually doing any journal entries in this section. We're just helping you understand kind of the concept of a purchase discount. So some basic things about purchase discounts. In a company's operation, the collection of cash is super important. Now, providing credit to customers are important from a business competitiveness standpoint, so you can't just get rid of it. So the idea here is that we know that cash is super important to an organization. They need cash to be able to run their business. The problem is a lot of companies give out credit to their customers to be able to let them have a little bit of time for them to try to sell the goods before they have to repay it. And it makes sense, right? If you're a business, it's better to try to buy the goods, sell it, then be able to pay it rather than have to get the money up front to pay for the goods and then you waiting 30 days to try to recoup your money. So it's definitely a good business logic here. But the problem for the vendor is now they are basically having to wait for their payment, right? So they're basically lending you money for 30 days for waiting for you to pay for that inventory. So that causes a problem, a disconnect. Now, for a vendor, they have to offer these credit terms, but what they really want is they want to be able to offer the credit terms and receive the cash back as quickly as possible. So reducing that receipt time cycle from their customers. Now, purchase discounts are a great way to incentivize customers to pay faster by giving them a small discount for paying within a discount period, a shorter time frame. So we're going to be talking about how, we're going to give 30 days, but if you can pay us a little bit sooner, we're going to give you a little discount here so that you can save a little money. And for some companies, that is a reason for them to pay early than later. So when we do have these purchase discounts, we usually put them in terms. So on your screen, you see these weird numbers and dashes, and I'm going to show you how we read it. But then it also tells us some information about the purchase discount term. So when inventory is purchased on credit, credit terms are usually established by the vendor to the customer. Like I said, not all vendors offer this because we're getting good at paying a little bit on time, or we've got some other resources that we can pay. But those vendors that do offer it, this is how those credit terms are established. So what we have here is we have something called the purchase discount terms. It says 210 net 30, that's how we say it, 210 net 30, and meaning net. Now, the 2 here means the amount of discount you get in percentages. So this would be a 2% discount. The next number next to it would be 10 or 10 days. So you get 2% if you can pay within 10 days. Otherwise, the net, which would be after returns and after partial payments and after allowances, so after all of that, the rest is due within 30 days. So 2% discount if paid within 10 days. Otherwise, the net that is due in 30 days. So you can decide at this point not to take the discount period, which means everything is due in 30 days, or you can decide to pay all of it within 10 days to get a 2% discount. You may also decide that you might not have all the capital to be able to pay early, but maybe you have some. So you can pay some early to get that 2% discount, and then the rest would be due in 30 days. So that's what the terms mean, and that's how we interpret them from an accounting standpoint. So let's go through an example here to kind of show you how this all works. Calculate the purchase discount on $1,000 payable. So we're just assuming that that's how much we're going to owe. So if I pay this within 10 days, then I get a 2% discount because we have 210 net 30. So the way that we calculate it is we take how much we're going to owe. So in this case, $1,000, and we're going to multiply it by our discount amount, in this case 2%. So I'm going to multiply it by 0.02 or 2%, and that's going to give me $20. So my discount is $20, and so I only have to pay $980 to my vendor if I'm going to do it within 10 days. If I don't, I lose that $20 discount, and so I'll have to pay $1,000. Now, for most people, $20 might not seem a lot, but at the end of the day, if we're talking about the difference between what you pay and a competitor pay, anything that you can save also means that you can reduce the price to your customers, giving you a little bit of a better competitive advantage. So in this case, that difference might be 10 cents on the retail price. And so if you can sell it for $2.90 versus the next store who has to sell it at $3 to make the same amount of money, you will come out ahead from a competitive standpoint than maybe the guy down the street that's selling it for $3. So again, super important on why maybe taking the purchase discount makes sense at the end of the day, even if it's only 1 or 2%. Now, purchase discounts have two sides to think about. They have the customer side, so we are buying it from a vendor. So we are taking the $20 discount or the 2% discount. But the other side of this would be on the vendor side. So the vendor has what we call the sales discount. So we kind of use two different terms. So for me as the customer who's buying it, we call it a purchase discount. For the vendor, they don't call it a purchase discount, they call it a sales discount. Okay, so this different terms, but they basically mean the same thing. So we want to keep that straight. So we have two sides to this. We've got my side who's going to pay less, and we're going to have the vendor side who's going to get less once I pay within the credit terms. In this case, the purchase discount terms, which is 10 days. Now, it's important to understand what side of discount you're on because that is going to tell us how we're going to do the journal entry at the end of the day. Now, some mechanics about this purchase discounts. As a customer, when we pay our payables early and take advantage of the purchase discount, the amount of the discount reduces the inventory account. So we're going to reduce the inventory account by the $20 because our inventory didn't cost us whatever we booked it into books. It costs us $20 less than when we booked into the book. So we're going to have to reduce our inventory account. And we're also going to have to reduce the accounts payable because we no longer owe that $20. We can reduce that from our books so that our books still say we owe nothing after only paying $980 instead of the $1,000. So that's what we're going to need to do from a purchase discount on the customer side. From the vendor side, it works a little bit different. As a vendor, when a customer pays their balance early, we reduce the sales revenue account. So instead of selling it for $1,000, we only sold it for $980. So we're going to have to reduce the revenue by $20 and the accounts receivable because we don't expect the customer to pay us that $20. So we have to extinguish that $20 debt on their account. So we'll reduce the accounts receivable account by that $20. So we'll reduce that and we'll also reduce the sale at the same time. So that's what the journal entries would kind of look like if we were doing them for this problem. So that is a conversation on purchase discounts, also known as sales discounts to the vendor. Hope you enjoyed this lesson and we'll see you in the next video. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or click in the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.